I think we are live.
Yeah. Hello, everyone. Thanks a lot for joining us today. If you can hear us, can you please type yes in the chat box if possible? Great, great. I think people can hear us.
There was some lag, I think. Hi, good evening, folks. We'll just take 2 minutes to settle down and then we'll start. Is my audio clear, Parikshit?
Yeah, it is clear. Yeah.
Oh.
Can you refresh the uh, slides once, the PPT once? Yeah, hi folks. So before you start sending your questions in the chat box, we will first go through all the queries that we received on Twitter. We sent out a tweet asking folks to send their questions on our latest small case MI India top 10. So we'll first go through these few questions and then we will take up all your queries from the chat box. So till then, please hold on and yeah, look, I think we can get started.
Okay, so good evening, folks. Thank you so much for joining. Thank you so much for your overwhelming response to MI India Top 10. We are very happy that we have been able to understand the strategy with the videos that we put up, and we were able to come into that. Some questions that we've already received, we'll go through that. So first one is from Mr. Haldar. Recently, I subscribed to NNF10 because this was the only large cap portfolio available. Current portfolios are ATH2, all cap, NNF10. If I switch to top 10 with NNF10, how the synergy will work? So this is a question that we've received from other users also. So NNF10 and top 10 work on very different universes. Top 10 is working on the Nifty universe, NNF10 is working on the Nifty Next 50 universe. So the universe is different, so there is no overlap as such. And if you are an NF10 user, you can very easily add top 10 to it, which will add to your overall dynamics of the portfolio. Now, if you have all cap, NF10, and ATH2, the decision that you need to make probably is whether you are already near the recommended limits in those strategies, and whether you would want to add another sort of more core element to your strategy, to your portfolio. So that is sort of a personal choice. I wouldn't say that you have to or you don't have to, but that is pretty much dependent upon the situation that you have. If Mr. Rudra is here, maybe you can add more color to the situation if you would like to. Mr. Anwar has the next one. Already subscribed. Does this model redistribute the profits, limiting the allocation to 10% every month like an NF10? So yes, you're right. This is the basic dynamics remains the same as an NF10. At the end of every month, everything gets equally redistributed to 10% each. If there was any profits, it get redistributed. If there was any loss and the stock is still in the portfolio, that will also get redistributed and it will come back with the equal weight post the monthly rebalance. Alpine Investor has the next one. How much dividend can we expect from this portfolio? So while overall Nifty dividends range between 1.2 to 1.5% roughly, because this is a selection of stocks from Nifty, it is unable to, I'm unable to sort of, have a clear picture of how much exactly it would be. So I'm assuming that we can keep our expectation from 1 to 1.5%. That would be the kind of dividend that I would expect from this portfolio. Second question is, can you keep this as a core portfolio and just SIP apart from investing in mid and small caps? So yes, your query is right that you can keep this as a core portfolio. and just keep sipping into this apart from your mid and small cap investing. Praveen as the next one. How does top 10 compare with MI Evergreen as a core investment? Specifically, would India top 10 be a better complement to ATH than MI Evergreen? So ATH is a very different kind of an animal where it is chasing all-time high stocks regardless of the universe, pretty much. And what we have seen there is that very few times will you see Nifty stocks coming into ATH. I mean, not as many times as we would think. So from that perspective, ATH will have probably a very unique universe versus top 10. Versus Evergreen. Now, Evergreen is another very different kind of a portfolio where you are looking at a hedge and you're looking at top 200 stocks. So there may be times when some stocks may overlap with Evergreen, but I don't think that would be a common feature that will happen, because when you are looking at 200 stocks, the usual momentum, the high momentum is not in the top 50, but in the 51st to 200th stock. So from that perspective, this is again a very unique subset to add to those two. Saurabh is saying, I want to subscribe, but my only fear is that expense ratio and return. If I invest 5 lakhs straight, could I expect a better return compared to direct Indian investing in long term after paying the expense ratio and all the tax that I have to pay after every rebalance? So 5 lakhs is something that we think should be your minimum sort of target for this, because at 5 lakhs and currently at I think what 4199 expense ratio to start with, I mean, you're looking at 0.8% of an expense ratio that kicks off. But also keep in mind that dividends have not been accounted for in these returns that we've had. So if you get a 1% sort of a dividend, even if I assume that 1% dividend will be there, so I would like to think that most of the expenses, whether it is the expense ratio of subscription or expense ratio of transaction, because it's a low churn strategy, I would think most of them should get covered by dividend, so that you can get net the results from the strategy. So from that perspective, I think if you plan to start from 5 and build it upwards, I'm hoping that we will do a better return than 50 on this. Mr. Singla is the next one. As of now, minimum investment is around 35,000 and all 10 stocks are equally weighted. Suppose in future Bajaj Finserv gets added, which is around 16,000, would minimum investment jump to 1.6 lakhs? So yes, the minimum investment will depend upon the largest constituent of the portfolio, and hence we don't recommend that you start anywhere below 2 lakhs for the strategy, even if you are planning to build it up to 5 very soon. So if you start at 35,000 and then maybe some rebalance hits a stock which is maybe even 8,000 or 9,000, it will immediately require you to add a lot more capital to stay relevant. So don't start at a very low capital. You must start at least 2 lakhs and definitely try to build to 5 lakhs very, very early, because otherwise the expense ratio will take away all the advantage of the strategy for you. Next one is from Rohit. If user just does entry and exit of stocks as per strategy without weightage rebalance, then how would backtest results would be? Thanks in advance. So we have not done that backtest, whether weightage, if the rebalance, if we don't rebalance the strategy to equal weights, but my gut feel is that it will be slightly better. Reason being that you're allowing the winners to run, and winners like some Adani stocks or some Tata Elxsi or something like that. But I don't know in Nifty 50 how many such stocks we had in the past. So it may be slightly better, but then it also makes it a little lopsided, in the sense that because it is already a concentrated, reasonably dense concentrated portfolio of 10 stocks only, and if one stock becomes like 30%, 20% of your portfolio, that becomes extremely skewed, and we don't want that, even if it is offering a better return in a short term. So my sense would be to sort of not go for that unbalanced or unrebalanced situation, but go with the rebalanced situation, because a lot of times what we are also seeing, like in NNF10, I can give you the example that stocks that have run up are also getting redistributed. So a lot of Adani stocks that we had in NNF 10, they got redistributed. The profits got redistributed every month. So like for instance, I think Adani Transmission is up 700% in that portfolio. So that entire gain is redistributed, and we are sitting at 10% allocation to that stock. So tomorrow, if Adani Transmission even goes down 50%, just for example's sake, in that month, even then you've lost just a very insignificant portion of the things that you've already set aside. So from that perspective, I think uh, doing an equal weight is very, very good. Next one is from Saurabh again. When markets correct sharply, how does the momentum strategy work at that time, especially when you have a 10 stock concentrated portfolio, not cash in reserve? So if it corrects very sharply, like it did in March 2020, you basically will get hit pretty hard. So you have to see it from a point of view that you are not investing in a trading strategy. You are investing in the index and you're trying to improve on the index. So imagine if you were invested in, the Nifty index or an ETF or something like that, and the Nifty falls. You're not trying to trade there out of it. So the purpose is to sort of be in index stocks and try to better the index, but not behave like a active trading strategy. Because once you lose that low churn, the cost, etc., and the churn will kill the returns totally. So we have to bear that risk, and when we look at this, and in the past 6 years that we've run this strategy on, there have been several sharp falls. You can go and look at the granular data each month. I think it's there on the Weekend Investing Hub each month how the strategy has performed versus the Nifty, and you can look at the stocks. You can look at the data in terms of the deepest or the worst months that we've seen and how it has performed and how it has sprung back up. I remember from March 2020 from the bottom, I think it took less than about 4.5 months to come back to even the strategy, whereas Nifty took something like 6 or 7 months. So from that perspective, some risk to market corrections we'll have to bear on that. Shekhar as the next one, like NG 50/50, can we have one weekend investing subscription of NG NNF 10 plus MI top 10 with desired allocation of 50/50? So I think you can do this at your own end. You can allocate 50% capital to NNF 10 and allocate 50% to top 10. And if you continue to rebalance, it will work just like a combined portfolio of two strategies which have been combined. So I mean, it will be difficult to do it at my end because I have platform issues and constraints. But at your end, you can do it combining these two strategies. Kalyan is the next one. What is your recommendation on doing monthly SIP for a strategy like MI India Top 10? Should we wait for the rebalance announcement every month and then proceed? How about a strategy which combines both top 50 and next 50, next 50? So first question, the answer is that yes, monthly SIP is very good. You can also customize it as per your liking. You can do a bi-weekly SIP if you like. You could do a weekly SIP if you like. The invest more button will help you do that. If you are rebalancing very near a rebalance day, let's say 2 days before or 1 day before, there I would recommend that you don't do that rebalance, that addition of more capital there, but allow the rebalance to happen, because if some stocks are going out, then why should we add more towards leading to that point and then exit it 2 days later? Why bear that extra expense then? So from that perspective, if your addition of capital is near the rebalance date, please allow the rebalance to happen first and then proceed with the SIP or the investment. The strategy you are saying, which is combines top 50 and Nifty next 50, the strategy of combining them is fine, but there is an issue there that Nifty next 50 will have stocks which will have more momentum at all times on an average than Nifty stocks. So as soon as you combine these two, I mean the Nifty 50 stocks overpower Nifty stocks in terms of momentum. So we've run those studies and we could not get very good results because Nifty next Nifty stocks, which are full of Adani stocks, for instance, right now, they come and overpower all the other more mediocre momentum stocks in Nifty. So it becomes a Nifty next 50 dominated portfolio, which kind of defeats the purpose. But two separately, if you can do two silos and you can combine at your own portfolio, and I think that should achieve the same purpose. Veer as the next one. I saw the combination with other weekend investing strategies video basis combination analysis shown. Should ATH2 and all cap investors avoid this small case? So if ROMAD ratio is not improving a lot, and you are already sort of not invested reasonably to the recommended limits in the strategies you are holding, I mean, you can take a call on that. So if you are very near exhausting your limits on those strategies, add a strategy. If you are not there yet, and the ROMAD ratio is also not improving by adding it, you can definitely let it go. So that's
Also to add, Alok, I think
yeah.
along with MI into your top 10, ATH and all cap do have good ROMAD ratios, is what we have
Okay,
seen
okay,
even from the
okay,
video. You can have a look at the video. We published a video a couple of days ago. You can have a look at it. Yeah,
okay. Maybe we can also provide a link somewhere in the
sure.
um, post this event. Him as the next one. Subscriber of all cap evergreen ATH2 and NF10. Thank you very much. Need guidance if top 10 has a place alongside these, or need to add a small cap focused one instead. So I think you have a good number of strategies which are already like all cap and evergreen both have large cap, some large cap focus, and NF10 definitely also there. So I mean, you're right. You need more of small cap focus than more of a large cap. So I would recommend if you can get into MI25, MI35, MI50, any of these strategies would do well. And so maybe you can give a pass to top 10 if you like. Mona Lisa is asking the next question. I hope the coming monthly rebalance would be skipped as the portfolio hasn't completed a month. No, ma'am, this skipping business will not happen because it is a running strategy. Regardless of where we are starting for any particular user, the strategy is like continuously being run on a particular algorithm since 2016. So that will not be broken. And hopefully, we'll not get a rebalance change. That's what I can hope for, but I can never say that. And rebalance changes in this strategy are very infrequent. So the churn is very low. So hopefully we'll not get any churn. Maybe. Mohit as the next one. Would you be guiding a subscriber to do opportunistic SIPs based on market conditions? So Mohit, I'm sorry, we cannot do that. Our license does not permit to give any customized, advice or customized planning for you. So this comes under the purview of being customized to you or being customized to certain people who will do the opportunistic SIP. So we will not be able to suggest that. Anshuman is the next one. Does the strategy take care of avoiding low liquidity and circuit to circuit stocks even if they're showing strong momentum? Yes, I would think that no Nifty stock uh, currently or even in the past uh, has been a circuit to circuit stock. Maybe for a day if some really large some news has come around. Of course, I mean Yes Bank and India Bulls were in a part of Nifty at one point of time. So, but even then, because the Nifty stocks are always also in the derivatives F&O category, so there is no permanent circuit there. So I mean, it will hit a temporary 10%, then it will hit a temporary 15%, then it will hit 20%. So there will be no circuit to circuit as such. I mean, the circuits are open for the whole day, and it will find some balance at some point of time. So no fear of those small cap or micro cap exit issues uh, don't exist in Nifty stocks.
Yeah, Alok, we can now exit the share screen and we can take
Okay.
questions from the
Okay.
chat box. Yeah, can you share queries from the box?
One second. Let me just see. Okay, Amar has the first one. How many cap? How much capital should? How many capital should for lump sum as first installment? Okay, can you decipher this? Uh, Lump sum as first installment. How much capital should be there for first installment? I hope that's the question. So, from Smallcase platform settings, the current minimum is 35,000, but that is irrelevant as far as I'm saying. I'm saying that we need to target at least a minimum of 5 lakhs very quickly. We can start with 2 lakhs, but then have a runway to reach 5 lakhs very quickly, because we don't want to have 2 lakhs running for a year and the expense ratio going too high on that. So while you can also start with 35,000, but if the rebalance, as I said in the previous questions, comes where a stock of 18,000 comes to the portfolio, immediately the portfolio will ask you to add 1.8 lakhs or something like that. So plan for at least 2 lakhs to come in immediately, and then over a very not so distant future, plan for 5 lakhs, I would say, minimum. Rajiv has the next one. I subscribed today. I'm new to Smallcase. The rebalancing will be automatically in Zerodha, or I have to do it myself. So, welcome to Smallcase and to Weekend Investing. Rebalancing is a process that you need to trigger. So while Smallcase platform will give you everything set up, and that one trigger button will come to you that your rebalance is due, and now if you want to rebalance, just press rebalance and the rebalance should get done. So the rebalance does not happen automatically, and you will need to trigger it. Uh, like for in this case, on the first of every month, if you want to rebalance on the first of every month, you can do it a couple of days later also. Not really an issue. Savan is the next one. What is the best combination of strategies that one who want to start new can have? I think Parikshit, we did a Roman ratio study a couple of days back, and I think MI25 or ATH, one of these two had the best combination strategies with top 10.
I think both MI25 and ATH can be great combinations, along with ST, ATH, and all cap also. In all these strategies, from a lower cap sort of a universe, I think, which have a little bit of a higher drawdown compared to Nifty 50 universe.
I also want to add that if you're starting new, don't worry about combinations. Just start with top 10 and just get the flow. And over time, you will experience how small cases are working, how rebalances are working. And you can add more at that time. There's no rush to start off with the best combination of strategies if you like. If you're already holding one of the strategies and you want to add top 10, then of course we can take a look at what is the complementarity of it. Arun is asking, is there an investment max limit? So currently the investment max limit tentatively has been set at 30 lakhs. We will explore once we get populated and we start to also, study what is the impact of current users on the market on first of every month. Post that, we will either enhance this limit, or we'll come up with different plans for people who want to have larger portfolios. So right now it is 5 lakhs to 30 lakhs is the sort of the recommendation. Ganpati has the next one. Can you also give the after-tax returns of the small case considering both short-term and long-term capital gains? So Ganpati, this is a sort of a very individual, customized question, because one, we don't know how many trades will go into short-term and how many will go into long-term in any particular given year. And two, many people who are very aggressively trading as a business pay business tax as taxation, and not short-term capital gain or long-term capital gain tax. So it is taxation is always very dependent upon that particular situation. So, and also this is not my area of forte, so I don't want to get into the taxation matters at all. I don't think I'm even allowed to from SEBI perspective. Abhikar has the next one. Yeah, so we've already answered this. So 30 lakhs is where we are right now. We'll very soon probably give an update on this as soon as we get a hang of how things are working. Aniket has how to implement SIP into strategy given that most of the SIP amount goes to stocks that are going down. No, so that is not particularly true. I mean, it need not be that unless the SIP amount is extremely small. So if you are not having a very small SIP amount, that may not be the case. And even if you have a very small SIP amount, it may not go to the stocks which are going down. It will go to the smallest stocks or the least expensive stocks, but those need not be the ones which are going down. But yes, I mean, there is some truth to the angle that in momentum investing, they invest more or the SIP should, go to the strongest stock. But the small case platform is not geared for that type of differentiation between stocks. They see all stocks equally, and then whatever can be allocated gets allocated.
Also, if
So
your SIPs are small, I mean, we've said this in the previous videos that you can collect your SIPs and add lump sums whenever possible at equal intervals, preferably.
Mangesh says if the stock universe is Nifty 50, then why restrict this to max size of 30 lakhs? So then there cannot be any restriction. I mean, we can keep it at 100 crores also, and uh, somebody can just come and rock the rebalance on one fine day. So we need to gradually step it up. We will restrict it to this right now, and then see how it goes on, and then take it further up. Mr. Sharma says, can there be an emergency rebalance if required for top 10? However, it is only emergency exit and such situation may not arise. In the last 10 odd years that I have been doing this momentum investing, either in my own account or later with user accounts since 2016, I don't think we have done an emergency exit despite whatever may have happened in the market. Uh, the only maybe one or two cases that may have happened, and my memory serves me right, those were cases where the exchange maybe was saying that there is a sudden uh, flag from the exchange or from SEBI that this stock is going to get delisted in 2 days or something like that. So barring that, I don't think because of the movement of stock, we will do an emergency rebalance, because my own experience in this is that by the time we realize in any situation that we should get out, it is already too late. So if the stock has dropped 40% and then two circuits down on a Nifty stock, that's 40%, 2 days, or even on a single day it can. But let's say 20%, 20% each stock is down, and now we say we must get out of the stock. But then by that time most of the damage is anyways done. So why give up the small probability that there may be some reversal on that? That also can happen. So the whole idea of trying to remove trying to the predictability of what is going to happen to any stock, that remains the core idea, and that's why we don't do it. Like in this, I can tell you, I think it was Feb March or sometime, Adani stocks took a huge beating. We had several Adani stocks in NF10 and several other strategies, and many small case managers did a ad hoc rebalance out of those stocks. That no, Adani stocks are frauds, have this and that. They said all kinds of things, and they rebalanced out. What happened after 10 days? The stocks were at new highs. We remained in the stocks, and the stocks rallied back. So I'm just saying this is one example. Other examples may not work this way, but so if over a period of time 2 examples go right and 2 examples go wrong, then it balances itself anyway. So I mean, I wouldn't worry about it. And the Swani is saying holding will be visible in kite or small case. So small case will create a backend holding your portfolio list, which you will be able to see on your portfolio app. And of course, the transactions are happening in Kite for you. So the Kite back office is also showing you the holding. If you do any transaction outside small case, let's say you go to Kite and you directly sell something and don't inform the Kite backend by an email, then there'll be a discrepancy because your stocks would have got sold on Kite, but small case team would not have come to know that you've sold it on Kite. So never do a rebalance outside the small case. In case you do a direct trade on Kite, please inform small case so that they can bring it back to sync. I hope this answers the question. Arvind, as the next one, can you please suggest your thought on combination of MI All Cap, ATH2, MI India Top 10? I think I've already answered this in the previous questions. So unless you are, close to the recommended limits in these strategies, if you wish, you can just keep it at 2. If you want more core strategy, which is more, you know, lesser in terms of volatility, and you're happy with lower returns, you can add top 10 to these two. Ambrish has the next one. How the past 6 years CAGR and max drawdown change if the profit losses are not redistributed at the start of each month? Any results analysis you've done? So we have not done a analysis on this, but my gut feel based on long-term studies that we did in NNF 10 is that there may be a better outcome in terms of CAGR if the profits are not distributed. The main reason being that winners becoming multi-baggers and so on and so forth. But then, as I said in the previous query also, that there is a huge chance of this concentrated portfolio becoming even more concentrated, and strategy and the stocks become going higher and higher, from 5,000 to 10,000, 15,000, 20,000. So that makes it very difficult for new invest more or SIPs to happen, and all kinds of complications happen because of that. And of course, you are having a one stock which is dominating the portfolio 25-30%, something like that. So it is, and the whole idea of these strategies, both NNF 10 and top 10, is to have a more reasonable, even if not, out of the park kind of returns, to have Nifty plus few percentage returns. And if we are able to compound at that over a longer period at low expense ratio, I think we should be able to, get that compounding impact. So while it is correct that if we don't rebalance, we may get a slightly better return, but I think we are good with the current sort of redistribution. Puneet has the next one. Am I India top 10? Yes, it's a relative momentum strategy. It will never go to cash. Hello, Amit. Chaitanya has the next one. If anybody like me starting from 10,000 SIP at 25 age wants to invest into this, 10,000 per year expense ratio isn't sustainable. The mutual fund become good option for young investors. Yes, very much so. You must go to a good mutual fund house. These strategies will require some minimum capital to start with. So I will definitely, even if you had 50,000 to start, I would not have recommended this to you, because the expense ratio will kill the returns for you. So start off with one or two good mutual funds. There are plenty of them, and I hope and wish you a good investing journey. Aniket has another one. If I subscribe right now, can I invest my very first lump sum starting from the next rebalance as only few days remaining? So subscription and starting to invest are two different events. You can subscribe now and invest 3 months later. I mean, nobody's going to ask you anything. So these are two different events. You can subscribe today, start whenever you like, but your subscription starts from the day you subscribe.
Look, I think what also he was trying to ask is that, since the
Okay.
rebalance is coming up,
Ah.
so would it be wiser to sort of invest money immediately after the rebalance so that money gets into the
See, again,
fresh
Parikshit,
portfolio?
these are questions which nobody has an answer to. I mean, tomorrow
Yeah,
if Nifty hits a 10% up circuit for
yeah.
whatever XYZ reason, nobody can really forecast that, or down circuit, or whatever. I mean, this is something that you can't really have a finger on. Okay, Amit has, we see 40% discount for all users. Is there no difference between old loyal customer and one who wants to start with you? So, Amit, in terms of loyalty, I mean, there is definitely a lot of value that an old customer brings to us. And we are actually, if you will believe me, we have been pushing Smallcase for last year and a half, almost 2 years now, to create platform features where we can distinguish between the loyalty age of a customer versus a new customer. So that, I have been told, is in the works. It should happen in 2022 for sure. And once we do that, we will definitely, have a loyalty program running where if you have been with Weekend Investing for a longer period, it will give you some additional benefits. So definitely, I mean, that is there in our mind. And of course, all new users coming in are also going to become old users at some point of time. So we really don't want to, have too much of differentiation there going on. I mean, everybody is dear to us. Vineet says, can we have a combination of strategies? Yes, you can have combination of strategies. Please either drop us an email and we'll refer you to or you can go to a YouTube channel and see a video which we did two days back, I think, where combination of strategies was discussed, and you can see that which strategies have a better returns to drawdown ratio and so on and so forth. Rudra has, I think we've asked this question, right? ATH2, it called kept 9 and F10. So we can, I mean, if it is a specific combination of things, and also, Rudra, one thing is there that all these statistics and calculations we're doing is on data that is already behind us. So it is only a sort of a rough guide to what will happen in the future. If your Roman ratio has been 0.4 for some combination, it may not be 0.4 for the next 5 years. I mean, it may go to 0.6, it may go to 0.3. So from that perspective, don't take this as gospel in terms of the combining of strategies, but a very rough picture that whether it adds or it reduces from one strategy. So if you have a particular set of strategies like you have, just drop us an email with this and we will try to calculate that Roman ratio for you, and whatever feedback we can give you on that, we will definitely give that. Varghese has the next one. Please explain the Get 40 offer mentioned in one of your earlier videos, how to avail the same. So, Varghese, when you go to the subscribe page on weekendinvesting.smallcase.com and you start to subscribe, you will come upon a window where it will ask you for a offer or a coupon code. If you do you have a promo code? Some language like that is there, right? Parikshit, what does it say exactly? Do you know? Cannot hear you.
I'm sorry. So there is a box. There is a box where you can enter a promo code. So it's quite visible over there, right beneath the plans. So maybe if you want, you can just share the screen and show a document for people who may have some questions. Do you want to do that?
Okay.
It'll ask for some details, I guess.
Yeah, so I think it's not really something that is really hidden. It will be right there in the face. So before you hit the place where you make the payment, you will come to the offer section and just type Get 40 in there.
Also, if you need a pre-applied Get 40 code, you can write to us and I will provide you the same. So we have links to already applied. Yeah, we have.
Oh, great.
You can.
I didn't know that. Okay, very nice. Yeah. Skull says, can we have the backtest strategy from 2010? So what we have done in all our products is not go too far behind also, because what is happening is that a lot of stocks have gone out of, gone into oblivion, and the data for the stocks that have got merged, a lot of corporate action has taken, some rights have come, is not so clean. So the farther you go back, the more survivorship bias errors will be there, despite our best efforts to get that data to recreate that index at that particular period. So from that perspective, we've avoided doing extremely long backtests. Although for strategies which don't have a subset or a universe, for instance, MI ATH or MI all cap, I think both of them actually. We did a 20-year run on that. And the results of the last 4-5 years was not very different from the past years, because in the last 5 years we've seen almost all kinds of markets. We've seen 2017 fall, 2017-18. We've seen 2020 fall crash. We've seen some very nice gains, one of the largest gains. So we've seen some maybe 17-18 was a flat year, 18 was a down year after that. So we've seen a lot of the features of the market in the last 5-6 years. So the need for a very long backtest uh, is not there. But yeah, at some point, if we are able to do it, they will definitely do and share that. No, not an issue. Apoor says, how can we hedge MI top 10 with options or futures? So there are many ways of hedging your positions. In terms of, you could hedge the portfolio with Nifty. So you could be long MI top 10, and you could be short Nifty futures in some proportion. You could have sold Nifty calls against that. You could sell those particular stocks that you are holding in MI top 10 calls against that. So there are so many ways of creating the synthetic sort of a hedge. But hedge comes with its own costs. The cost of putting the hedge, and then if there is a runaway market, then you've let the upside go because you've already capped your gains. So it's a very tricky maneuver that you must do after proper testing, and not blindly apply a hedge to it, because 1 month out of 12 will be the major gain for that year. In any year, you will see 1, 2, or maximum 3 months is the period where you will make maximum gains for that year. And if you miss those months, I mean that year is gone for you. So from that perspective, I mean, we don't hedge for the sake of when we're trying to get returns from the market. But if we are creating an income generating product, and we'll try to do that, we'll try to create income generating products from top 10. There, of course, yes. I mean, you could have, maybe covered calls. You could short puts. You could do covered calls with stocks. You could do covered calls with Nifty. All kinds of synthetic combinations are possible. And as and when we are able to, build those kind of products, we'll definitely bring them to you. Good evening, Rushikesh. What would be the ideal recommended SIP amount for the small case? So SIPs also are a variable component in the small case universe. The way the small case algorithm works is that the largest component in the portfolio, let's say you have 10 stocks and the largest one is 8,000 worth. What small case does is it says the largest component multiplied by 2, rounded off to the next 1,000 rupee. So if your largest component is 8,200, then 16,400 is into 2, near largest, and rounded off to the nearest higher 1,000 is 17,000. That becomes the minimum SIP amount uh, as per the small case algorithm. So SIP amount can also vary. My gut feel is that an amount of about 20,000 rupees will stay same for large part, because there are very rare components above 10,000 that will enter this strategy. Maybe if you want to be safe, then accumulate 2 SIPs and do 40,000, invest more at one point of time instead of doing a 20,000. Mr. Ajay is saying, I'm a young investor. Top 10 is almost always beats index. It's better to go with 5 lakh investment and 3 times margin trading facility, or invest 5 lakhs in T10 and pledge it. So, Ajay, I will not be able to give this advice. This is against my license to give advice like this. It is very customized in nature. You will need to find a financial planner or some other advisor who can, advise on this, because I really can't do that. Shashi Kiran says, can we have a comparison video of MI Evergreen with other strategies, just like you did for MI India Top 10? Okay, yeah, I guess we could do that. Yeah, but that's really not a top 10 query, so we'll, sort of take it some other time. But
Also, very
hopefully
soon
once.
we'll be launching this along with our website, so you'll be able to make your own comparison, I mean,
Oh,
combinations and check
great,
the results. Yeah, yeah, that'll be out very soon. Yeah, 1 or 2 weeks.
great. Manish has the next one. This is my first time with small case and weekend investing. Thank you very much. Which strategy is better suited for a beginner? I'm fine being invested for long term. Capital is not a concern too. So I think top 10 is a very good strategy to start investing. It is simple. It requires your attention once a month. It is having the lowest expense ratio currently. Uh, you could start this and then explore other strategies or other mid cap, small caps, or other combinations. But this is like the very basic thing that you want to start with. You could start with this. Mangesh has the next one. If I have a brokerage plan of 0.3%, then will the monthly churn affect my return significantly? That the one shown in presentation. Has there been any study on transaction costs? So we've kind of assumed uh, discount brokers when we have done our calculation, and that has not impacted the returns by any sizable quantity. But at 0.3%, I mean, if the churn is 1.5 times, so you can please calculate that if you have a 10 stock portfolio and you have 15 trades in a year, so 15 trades would mean if you're putting up, let's say, 10 lakhs capital, then 15 lakhs worth of sales happen and 15 lakhs worth of purchase happen. So 30 lakhs is your overall uh, the volume of transaction that is happening. And at 0.3%, you can calculate what is that kind of brokerage that we give. And then versus your overall capital, where does it stand in terms? I think it will be still less than 1% of overall cost. So, this 1% will get covered up by dividend itself, and then of course the expense ratio of 0.4% or something that you have to bear on that. So from that perspective, overall, for a 10 lakh portfolio, doing 1.5x churn, the overall cost is coming out to be about 1.3% overall. If we get dividend somewhere near that, that entirely gets taken care of that. So that's a thumb rule sort of calculation that I've done. Rajat has the next one. Investing in NNF10 with of 10K, and I'm planning to increase the SIP amount. Suggest me if I can do the same in parallel. Invest in MI India top 10. So, Rajat, if you are far from reaching the desired, size in NNF10, you can continue in NNF10 if you like. But I think top 10 is a very good combination with NNF10 because both will give a very large, sort of a large cap flavor, and they will not overlap with each other, obviously. But just see if this is possible for you in terms of doing comfortable SIP, but because you don't want to constrain the existing SIP because of this and ruin both of them. I mean, see if it is comfortable, see if it is makes sense in terms of the amount of capital that top 10 is expecting to start with, and then take it gradually. And also, I think to everybody, I would say that don't jump in with all your capital at once. Please build it up gradually. Market will, continue to do its thing over a very long period. Don't be in a rush to time the market. Bring it gradually, and you'll get the fruits of it. Next one is from Saurabh. I have subscribed to NNF10, Top 10, and MI20. Should I put lump sum and let the rebalancing do its work, or should I do a SIP? What is the recommendation? So I always recommend that bring in capital slowly. It may sometimes not be the best decision in case the market was, bottoming out and was in the upper leg. But you never know. I mean, the world is a very uncertain place today. So better be safe than sorry is my sort of motto towards everything. So bring it gradually. If you are late in getting the capital, at least your initial installments will make some buffer for you. If you are early and market goes down, then you'll really feel bad about it. So why give yourself some any pain is sort of my thought. Arun has the next one. As the corpus grows, it may cross 30 lakhs. Do we need to redeem partial amount in that case? So uh, we will definitely come out with more clarity on this before the corpus grows beyond that. Let's put it this way. So give us a couple of months and we should be able to solve this equation for you. Aniket has the next one. Do we have XIR returns shown in the small case app for each small case, or we need to track it on our? No, small case app has already started XIR returns several months ago. But of course, the XIR returns will be available once you complete 1 year on that small case. Because before 1 year, XIR can become quite meaningless at times. So the small case algorithm on the app sees what is your start date of investing, and then will spit out the XIRR uh, once you complete 1 year. But if in case you wanted to maintain a running XIRR, we've done several Google Sheet already ready formulas. If you go to the Weekend Investing Hub and in the content section, if you search for XIRR, you'll find several tools that we've already built, which are freely available. So if you want, you can build an XIRR for each of your small case, and also you can build a comprehensive XIRR if you like, which small case does not offer as of now. Varun says, does small case block investment beyond 30 lakhs? Yes, it will block it right now. So please don't try that. Ramesh says, since the addressable investment universe, if only Nifty 50, what if only 5 stocks are available for investment in a particular month? Will the amount spread? No. So the strategy is not to select stocks in terms of stock pickings, but to sort of rank stocks based on the momentum strategy and pick the top 10. So if if all stocks are falling, let's assume that market is really bad shape. All stocks are falling. Some stocks have fallen 5%. Some stocks have fallen 50%. It will still take the best 10, even though they may still be falling. So it's called relative momentum. So everything's relative. I mean the stocks that have fallen the least or that are showing the least propensity to go down further will be picked by the strategy, and you will always invest in 10 stocks at equal weight, regardless of what each one is doing. Rajat says, how much minimum in amount you suggest for SIP in NNF 10 or in MI India top 10 per month? So I think 20,000 is roughly my guess that should be a good minimum SIP amount. But in case in some months there is some minimum SIP that goes up because of constituent change, then you may add up 2 SIPs and invest more in one go. Tarun says, along with MI all caps, which is a better strategy, MI India top 10 or MI evergreen? So it's like choosing amongst your own children. I really can't say this one is better than that, because each has its own characteristics. MI India top 10 will be a fantastic Nifty stock, large cap, stable sort of strategy. Evergreen has a hedge of gold. All cap is evergreen. I shouldn't say evergreen, but always sort of across all market caps and doing well from that perspective. So it's very difficult for me to pick, because they have very unique flavors to them. So saying what is better, maybe you as a user can probably see which is better for you in terms of what is suiting your personality or what is suiting your requirement. But for me to sort of say which is the better strategy is very difficult. Saurav has another one. How does the rebalancing work in NF10 top 10? Will the weightage be rebalanced to 10% every month? That is correct, Saurav. So weightage is rebalanced to 10%, equal weight, all 10 stocks every month. Amit says, instead of individual subscription, can there be a bundled subscription? So we've given this idea to Smallcase. We currently don't have the platform capability of doing this, but as soon as platform capability is there, we can manage this. Yes, Parikshit, you want to say something?
No, nothing. Yeah.
Okay. Fly to Sky says, do you recommend SIP or collect lump sum and use invest more option when market is down? Tough question. I would do invest more on opportunistic lump sums if I have to do it, but if I'm having a SIP going, I don't want to disturb that and try to time it and try to put my mind where I should buy and where I should not buy. So I don't, in my own personal investing also, I don't try to time it. I just blindly do it every week, and that has worked reasonably well for me. Tarun has another one. Since the rebalance is monthly for this product, in case of a yes ban type of an incident, will you break the cycle and do a rebalance? So ban is never on cash market stocks. Ban is there in few FNO stocks. So even if we are holding, for instance, what can go into a ban in Nifty these days? Let's say we are holding a Tata Motors or something like that, or some other stock, and it goes into a 4-day ban, 5-day ban over FNO. It doesn't impact us at all. I mean, we are not trading these stocks during the month. When markets are falling, will we be sitting in cash? No, Sajesh, we will not be sitting in cash. We will first lose if the market falls during the month. We will first lose some amount, and then at the end of the month, the system will determine which are the strongest 10 stocks out of the 50, and rebalance into those 10 stocks, and then let's see where the next month goes. So just to give you a very quick example, I think I mentioned earlier also that after 2020 crash, uh, the strategy went into more defensive stocks, and then it was able to recover within 4 months all the losses from March 2020, whereas Nifty took 6 to 7 months to do that. So from that perspective, I'm hoping that, see, the biggest advantage of relative momentum is that it does not go and sit on cash and then have a lag in terms of coming back into the market. Relative momentum strategies always are invested, and they're invested in the strongest sectors at that time. So as soon as market starts to do the U-turn, those strongest stocks run like horses, and that is that gain which relative momentum is able to quickly capture. Of course, on the losing side, they lose more than absolute momentum, but it is able to capture it back also very quickly. So net there is no particular advantage or disadvantage as such. Uh, Vijay says hi, hello. Parul has the next one. What is the rebalance date for top 10? Like for Evergreen, it is the first of the month. It is the same, first of every month, first trading day of every month. So whether it is first, second, or third, it will be the first trading day of each month. Subhendu has the next one. What will happen if mutual fund or PMS managers start imitating MI India top 10 portfolio? Will we see slippages in that case? Please don't give them ideas. They can take a 4,199 subscription and run their PMS along with it. So don't give them ideas. And yes, if a large number of a few thousand crores of capital start to run on it, there will be slippages. But I am hoping that none of the PMS managers are, going to do that. Uh, but if we do find that, and that's why the attempt to bridge the max limit also, although I mean that is still no safety, but that's why we want to go gradually, step by step, and also monitor slippages. I am pretty sure nobody is going to get slippages in this. Yeah. Also, these are Nifty 50 stocks. Not many managers are looking at Nifty 50 stock. Most are into mid caps, small caps. They want alpha from those regions. So it won't. It really is not a bother that somebody will copy it or somebody will invest a lot in it. But that's why the some caution is there in terms of the overall cap of it. Thank you, Rishikesh. Shade has another one. You are a big influence on my trading and investing style. Would you prefer NNF 10 over top 10, considering there's more room for growth momentum? So yes, NNF 10 ideally should do better than top 10. In the last 5-6 years, it has just sort of been at neck to neck. So somehow NNF 10 has not performed better than top 10 for us so far. But as per design, NNF 10 should do better from that perspective. Now, and of course, it will also have more volatility and deeper drawdowns, I think. So NNF 10 is definitely a preferred place to go if you're looking for higher growth or more volatile stocks and better returns kind of a situation. And top 10 is more for more stabler and more sort of robust, stable growth on that. For exit, 100 DMA or 200 DMA breakdown is breaker. I don't understand this. If you're asking for what is the exit strategy, we don't exit in this. We rank stocks every month and we take the best ones. Mr. Chadda is saying, good evening, Alok. What is the weekly SIP you're running that you update every day? Is that no, sir. This is not MI top 10. This is 20 stocks from CNX 200 universe. It is a very simple strategy. It's sort of an offshoot of CNX 200 strategy, but slightly different. And it has poorer results than Evergreen. I don't want to run the existing strategies due to regulations. So I have had to create a different strategy for my own funds. But I'm happy with 15% gains on that if I am able to achieve that. So the purpose is not to, run money on something else other than what we are doing research on. But the regulations are such that can't be happening.
We can take up last few queries, Alok, before we
Okay.
wind up, maybe. I mean, 3-4 questions or 5.
We have only 4-5, so we'll go through that.
Great.
Captain Whittle has next one. What happens if one of the stocks has a high drawdown? Will you do a rebalance before the due date? So ideally, sir, we will not do a rebalance. We will take that in the stride and hope that we get a high upswing in some of the stocks to counterbalance that. But if there is a exchange or a SEBI related diktat that stock is going out of listing or something like that, which requires emergency procedure, we will definitely try that. But as I mentioned earlier, usually these things are very late. And my sense is that most stocks will have some inclination of all this, especially it is operations related, much before the regulators or the exchange come to know about it. So we would have exited many months earlier. This is very rare case that will happen, if at all. Mr. Chadda is the next one. What is the weekly SIP? Oh, thank you so much for your nice words. But just, as I mentioned, it is a CNX 200 strategy and nothing great in that strategy as such. Yes, ban, I guess, meant shares blocked for trading. So in Nifty 50 stocks, the shares are never locked. They may go to a temporary interim circuit breaker of 10%, then it gets opened for 15, then it gets 20, then it opens for 25. So they are never locked as such. But even if they are, we will bear it and say that this is part of the game. Aniket says if somebody comes with 5 lakhs as first lump sum investment and 50,000 monthly save in 4 years, most probably he should exceed 30 lakhs. So much before 4 years, much before even 1 year, we will have a plan in place what to do if you are going to exceed. So don't worry about it. Puneet says, would it be possible to run a backtest with relative and absolute momentum just for more clarity? So these are very different strategies it's not that we can run the same strategy in absolute momentum. It won't happen like that because absolute momentum will require a very specific exit strategy, whereas in relative we are doing factor ranking and doing that. So there's no, it's sort of apples and oranges. It's not possible to do this. Would you recommend doing weekly SIPs or monthly SIPs? So again, this is a very personal choice. If you have too much capital coming in, maybe you can do weekly SIP, but monthly SIP is maybe good enough for a monthly strategy, and weekly SIP may be good for for if you want to deploy more quickly and more amounts. So again, it's a personal choice. Really, there's no one right answer for this. So any more questions? I think maybe you can give a couple of more minutes and see if there is any more questions. We've come to the end of our questions. A lot of people have joined us today, so thank you all so much for joining us on this evening. And more than that, thank you so much for your faith and confidence to get into multiple strategies with us. A lot of you have not one, not two, not three. I even have users who have 15 strategies in different names. So, I mean, enormous, overwhelming response that we keep getting from all our customers. So, we are extremely thankful, grateful to all the users. One more question we've got. Would you say that MI Top 10 is a conservative strategy compared to other strategies? No, I wouldn't say that. I don't think it is conservative to that extent because it is concentrated in nature. But yes, the stocks are more conservative than an average other strategy stock. But the strategy itself is reasonably aggressive.
So just to give a quick reminder about the current offer, look.
Yeah. So we are still running. I was assuming that everybody who's come in is already subscribed.
We still have about
Uh,
150 odd folks live. Yeah.
Okay, so please use get 40 GET F40 as the offer code when you subscribe to this strategy, and this offer code is available till the end of this week only. So please do that, and if there's any more questions, we will take it up on email. Please send us an email at support@weekendinvesting.com and we can take up all your questions. One last question that has come in: why not add top 10 to universal products? So, Mr. Nayak, we have a long list of products that we want to add to universal products. You will see that happening over the next couple of quarters. Many of the current strategies will also be available on universal products. So, this is something that is already in the pipeline. So thank you so much all for joining. Good night to all of you, and we hope that MI Top 10 will be a good strategy that works out for you along with your other investments in all of our other strategies. Thank you so much. Bye bye.
Thank you. Thank you.